Well, it's dark outside, so got it.
What's going on, you all? This is, you know who? The CoWaCo, the company water cooler. Yeah. Like, subscribe, comment, and share. We're not financial advisors, but this is for educational purposes only. But we about to get it in. And we so excited for today. All right, so the first thing is, first thing, the two types of commodities investing. Chris,
Yes,
what you got to say,
yes,
my man?
sir. Yes, sir. Ladies and gentlemen, ladies and gentlemen, ladies and gentlemen, ladies and gentlemen, thank you so much for joining the company water cooler. I am Chris. That is Leroy. We appreciate you for being here. We're going to talk about briefly, because you can get into a whole lot with commodities because there are so many. So the two main types of commodities are hard commodities and soft commodities. So in that order, hard commodities are exactly what they sound like. Commodities that have to be mined or extracted from earth. Gold, any of your metals, right? Nickel, sand, anything that has to be dug from earth is a hard commodity. Anything that has to be grown, agriculture, livestock, it's a soft commodity. So hogs, corn, cow, anything that has to be grown, oranges, wheat, sugar, anything that has to be grown is a soft commodity. These are investable things. Obviously, you can invest in everything. Everything has been commodified. It's the word commodity, right? Literally, we have put a price tag on the soil that was free from God, that the air that we were given. We have put a price tag on what God has given us. So, and we've even classified it hard and soft. But you can invest in oil as a commodity, and then also, as you know, you can invest in oil companies. So oil commodities obviously deals with oil trading, and a lot of this stuff is future stuff, it's trading stuff. So, you know, I am a single share, ETF share, long-term investor, so I don't get into that side of the game. But you can invest in oil companies, BP, Chevron, and what's the Exxon? You can invest in them, and they have oil as a product. They sell oil to you as a product, right? You go to the gas station, you know, you go to the Sunoco. Sunoco is a publicly traded company that sells you oil. They also have real estate because they have to have a place to sell you the oil, sell you the petroleum that you're using to put in your car. They also sell snacks and beverages inside of their store. Of course, they don't produce any of that stuff, but they do work with companies. But when you invest in oil commodities, that's oil commodities. When you invest in oil companies, you're invested in oil in a way because that's the product you're invested in, but you're also invested in the real estate of the company and the overhead of the company and all the other products that the company offers. The same thing with soft commodities. You can invest in Hormel that makes packaged meat. They also have overhead and real estate facilities, industry. So you're investing in all of that. You're investing in the technology behind Hormel. You could also invest in hogs, just hogs on the commodities market. It trades like, obviously, stocks trade. But when you're invested in corn, you're invested in corn. But if you invest in Green Giant sells corn, but they also sell green beans, turnips, tulips, tomatoes, right? So when you're invested in the company that sells the product, they have to get it from somewhere. They have to get it as a commodity, package seller. And of course, a lot of these companies that sell hard and soft commodities have real estate and they have agricultural lands to produce that, because obviously they want you to get from the bottom to the top everything from them, vertical integration. So they want to sell you the corn, not just in the can, frozen, any other way you could store corn. They want to own the land that they grow the corn on. They want to own the corn. They want to own the seed. They want you to get all of that from them. So when you spend $1 with them, they're actually making $1 and not 60, 70 cents, because they got to pay 30 cents, they got to pay 5 cents over here, 10 cents over here, 3 cents over here, 2 cents over here, right? That's that vertical integration. So you have hard commodities. This is gold. This is oil. This is aluminum. This is all these precious metals. Then you have soft commodities. This is hogs, cow, corn, wheat, sugar.
That's what's up. All right. All right. So now, guess what we about to talk about? We about to actually talk about investing internationally, global.
Yeah.
So outside of the United States, that's what we do. Chris, what you got to say?
And it's very likely. So the most common way is to put your money in an exchange traded fund, an ETF, Leroy and I's favorite, that basket of good companies. The most common way is to put your money in an ETF, invest your money with an ETF that already has ownership in foreign companies, right? So you put your money in an ETF that has 99% of its money in the United States of America, but 1% of its money split between China, London, and Canada, right? That's a form of international investing. Obviously, if you want that percentage to be higher, you're going to look at different American ETFs that invest in other markets, right? Money is money, so money is connected globally. Don't ever think that money is strictly to the country it's in. Yeah, we trade in Benjamin Franklin's, but Benjamin had some fun over in China before he went to Nigeria, before he went to Toronto, before he went down to Brazil. So Benjamin has been doing some travel. And when you go abroad, Benjamin is a very familiar face. So, Benjamin does good work, right? But you can invest in foreign companies by way of American ETFs that have foreign investments. You can also do what's called ADRs. These are American depositories. You can invest in them. And a lot of them, and you do that through the Treasury, Department, but that's a whole, like I said, that's another animal, because a lot of them don't have trades here. And it's just easier if you don't want to go to American ETF route that has foreign investments. You can go with the American depositories. It's limited. You can still go with it, but a smart investor would say, well, just open up an international broker. You can find in America international brokers and invest your money. You never have to leave America to go global. I recommend you do get out the country and go see the world, because it's but so big. But you can find companies that have good relationships with international brokers and broker with them, or you can find an international broker that has a hub here in the United States, go there, put your money with them, and then now that money is going to whatever country or countries you want to invest in. The most common way is to find an American ETF that has foreign investments. If you have the resources and you travel a lot globally, when you go to another country and you open up a bank account in that country, obviously you're using that currency, that's money in their market. And so you're now invested in that country, obviously trading with their currency on that. So you could do that. If you have the means to travel and go somewhere else and open up an entirely new bank account separate of the United States of America, you could do that. The most common way is an American ETF that has foreign investments, or international brokers that have hubs and offices here in the United States of America.
All right. That's what's up. So,
and all of that is made available online. all of that. So yeah, they have offices, but pretty much every country, let me see. I'll say this. Hundreds, there are, I don't know how many recognized nations, 230 in the world or something like that. All of those companies know the United States of America, and I would argue that 90+% of them have offices here. You go in, and and they have U.S. connection. Log onto their website, see the investors, and set it up that way. Because you are invested, because you're not investing domestically, the process may be a little longer. You still can do all of this online, but the process might be a little longer because you're not invested in American companies and you're not invested in America through those. They still got to pay property tax, income tax. They still got to pay all the taxes, because if you have an office here, you got to have somebody to run the office. And they're in America. Who cares if they go wherever they're from? 90% of the year, they still employ here. So you're not going to slip that, but you can find an actual brick and mortar office and go there, or you can also find everything online. I would even recommend, if you want to invest internationally, go to your financial institution, go to whoever you bank with. Because again, Ben Franklin has made his way around the world. Money is money. And the exchange rate varies per country, obviously, but if I walk into Bank of America, I walk into Chase, I walk into Wells Fargo, I walk into Truist, somebody there is going to know how to get me invested in foreign markets. So you have those options.
That's great advice. That's what's up. That's great advice. You hit that on the head with that. Yeah. So now we about to get into the favorites of the week. Yeah. So, Chris, you gonna go or?
I got mine, but you go ahead. You look like you ready. Go ahead. Yeah.
Oh, okay. All right. So my first one is FedEx. Since we was actually talking about international FedEx ships, international.
I mean, and look, Leroy, I know I just heard a cha-ching in the background, so Leroy telling the truth. I just heard a cash machine. Go ahead. Yeah. Y'all don't know this. Leroy got some cash. Leroy got a cash machine at the crib. All right. Okay. I only got ones in my pocket, man. You know what I mean? I'm trying to be like you. Go ahead. Okay, FedEx. All right.
That's funny. That's what's up. Oh man, that is funny. I like that. All right, the second one is Pepsi. Pepsi is my second one.
Yeah.
They also is international too. And definitely Pepsi is also got their hands in not just drinks per se. They got their hands in other products also too. Even natural drinks got their hands in, so chips they got their hands in. So they just don't mess with drinks. So that make them kind of broaden and got their hands in one basket, I would say. And not too many baskets, but just enough to make them dangerous. So FedEx and Pepsi are my two that I actually for this week.
All right. Well, just because you said FedEx, I'm going UPS. All right. I'm going UPS. What can Brown do for you? But that was a side. So we can go ahead and stay on the international tip. I'm going to say Walmart. Walmart has over 4,000 locations in America. And they also have a couple thousand locations throughout the rest of the world. Walmart here is essentially what it is in other countries. It's the same thing. It's like a mini bulk retailer. You go in and you get everything that you want. But Walmart has deals and partnerships with businesses everywhere. So when Walmart goes to a country and they set a flag, they're trying to do, what they've done is they found a brilliant business model. Provide people with good products at a low price. But we know Walmart is a real estate company, so we're going to provide you a company that doesn't have a space with a space. All you got to do is, the split is probably 70-30 with Walmart, but we'll give you 4 feet of shelf space to put your product up, because when's the last time you've been into a Lay's store? You haven't. When is the last time you've gone into a Pepsi store? You haven't. How many Coca-Cola outlets do you know? You don't. They go and they say, okay, who's the biggest retailer? Walmart. And they go get 4 4-foots. They go get a whole rack. You know what I mean? You know, a lot of stores sell 4 feet at a time, but they go get a whole rack. So they're good for business because of the exposure and the foot traffic. And we're talking global foot traffic at this point. And as I'm going to keep mentioning, like I said last week, week before, I keep saying it, very excited about what Walmart is going to do with the e-commerce space and the delivery space. I keep saying that because Walmart is a great company, good dividend play. Walmart is going to be here. It's a great investment. Second, I'm going to go Tesla, because Tesla should be splitting soon. I believe it's a 3-to-1 that they're going for. So that's going to take Tesla down to 3 something. Get in now, get in then, get in later. Tesla's a great company. Again, their marketing budget is 0. Off the strength of Tesla being Tesla, it's $1 trillion company. You can't really lose like that. You know what I mean? If there's a change in CEO, I don't really know that the company is going to fall off. I don't see that happening, just because, I mean, that man is only 55. He ain't old. So he you know, I'm probably about 15, 20 more years he's going to be CEO, if not forever. You know what I mean? He might pull a Berkshire Hathaway. But Tesla, because they have what they're attempting to connect the world with internet. Like they're trying to connect countries that don't have internet, and I mean in places you've never heard of, right? Which is, you know, good and bad thing. And then obviously they're working on a Neuralink. And obviously they're level 5 autonomy, which we won't get there. We'll get there a lot sooner, actually, than legally, because that stuff has to be regulated. So we'll get to level 5 autonomy, which is full autonomy of the vehicle. You ain't got to do nothing to get in, and it'll take you where you have to go. For us to be comfortable with that, 25, maybe 30 years, right? Probably 10 years from now, they'll start pushing for it, and you'll have some amazing film series that comes out that promotes complete autonomy, making fun of people that, you know, still drive. And, oh, you still drive a gas car? Right? So, you know, you'll see the heavy marketing. Honestly, you'll probably start seeing it in some of these Fast and Furious movies, where electric vehicles are dominant. I hope not, but you might start seeing that in there. Just know that if you do, then it's just know that if you do, the electric cars are coming. Just know, okay? It's gonna be Terminator, but with electric vehicles. So I'm gonna go Walmart, and I'm gonna go Tesla.
That's what's up. Yeah, and they just signed in also too for a lot of stuff going like toward solar, electric. They just signed a bill
Yep.
for that.
Yeah. I mean, listen, alternative energy is great, right? Because humans have always used all of the resources that they have, always. There has always been solar energy, has always been wind, has always been hydrogen, has always been petroleum based, we have always had all these energy sources, right? Natural gas. A good portion of our grid is based off of these alternative energy sources, not even because it's not oil, but just because we found methods and mastered it and we can use it, right? Okay, we extract oil out of the ground and we use that. Well, okay, cool, that's not a problem. That's how you industrialize nations, cool. All right, well, we're gonna use wind energy over here. All right, cool. We're gonna use solar, that's fine. All of these energy sources have to be used in tandem. We can't just say everything's going to be all electric. That's not possible, because how are you producing the electricity? And don't tell me coal, because that's the answer. So we always have to use all of our energy sources in tandem. It's just how do we distribute these, right? If you and I listen, gas powered vehicles are not a problem. That's, you know what I mean? When you produce these on a large scale, okay, now we have questions. That factory is pumping out 100,000 cars a day. Okay, let's look at the regulations we need to put on that. But that's already being done. So we can't this is what we can't do. We can't jump from one thing to another and then demonize the thing we jumped from. We can't do that, because in this situation, we're not ever going to fully jump from oil. That doesn't make any sense, right? That's just it's not feasible and it's not possible. We're always going to need all of our energy sources to work in tandem with one another. So they signed that bill. It's a lot of money. You're going to see a lot of companies milking it. Honestly, they're going to take, hey, we're working on solar panels. They go $300 million. They might produce 5 solar panels that they put on their bill, but they got $300 million for it. So, I mean, it's because that's how it works. Big enough company, enough history, they've got enough institutional backings and enough financial backing, they'll get the money, right? It's going to be mom and pops. It's going to be the little guys. It's going to be you and I that figure out the best way to go forward, because that's how it is. That's how it always has been. That's how it always will be.
All right, you all. Like, subscribe, comment, and share. The CoWaCo, the company water cooler.
We here. Yes, yes.
We out.
Ladies and gentlemen, next week.
Peace.